Good morning, everyone. My name is Fahim Khondaker. We've got about 22 attendees online so far, and we've had over 100 people register. So we might just give them a couple of minutes and then get started straight after that. So I'll just give them 2 minutes and then we'll start at 9:32. Okay, everyone's kind of coming in. All right, while everyone comes in, can I just kick off by acknowledging the traditional owners of the land that we gather upon? And there are many people across Australia gathering today on many Aboriginal and Torres Strait Islander lands. It's quite fitting that, given the topic is aged care, that we pay our respects to the elders, both past, present, and emerging. The numbers are pretty high now, so we'll just get underway and see how we go. Just going to move this screen out the way. You will just have to bear with me a little bit. I've got a few things to juggle from a technical perspective, so if I am a bit clumsy, my apologies in advance. So my name is Fahim Khondaker. You'll be spending the next 90 minutes or so with me. So I just thought I'd quickly introduce myself. So at work, I lead the data analytics and insights practice here at BDO in Brisbane. I'm an accountant and economist by qualification. And obviously the reason you're here is that our report and the work that we did as BDO for the Royal Commission in the profitability and viability of the aged care industry. Our report is actually available on the website as well, on the Royal Commission's website, so please feel free to download it, and you will receive a link to the report at the end of this presentation as well. Outside of work, I'm a huge advocate for social inclusion and understanding. I'm a board member of Multicultural Australia, which is one of Australia's largest refugee settlement services. The reason I mentioned that is one of the draft recommendations is actually mandatory cultural awareness training. And I think the multicultural community probably presents a pretty big opportunity for the aged care industry in Australia as well for the growth of that sector. And the final point there, I haven't slept in a long time. I'm the father of 4 young girls under the age of 7. In terms of the presentation today, what it is, obviously it's pretty much we thought, given we're all going into the new year, and the recommendations, the final recommendations will come out in February. We thought that it would be good to get one webinar out the way on this side of Christmas, just to get people thinking on what to expect, if you haven't already, and probably plan for the new year together. We'll give you a bit of an overview of the work that we did with the Royal Commission. We were going to do an anonymous poll on the polling on this platform, where we really wanted to ask you about your key areas of focus, and we wanted to discuss your current responses and activities. Unfortunately, the platform doesn't quite work the way we expected, so what will happen is at the end of the presentation, you'll receive a quick survey, and if I could please request you stay on for 2 minutes and answer those, that'll be really helpful insights for the whole group collectively, and we'll play that back to you in terms of where we think the focus areas should be going forward and what the industry thinks. In terms of participants today, there's a wide variety of participants from various parts of the sector, advisors to the sector. We've got a couple of banks on board. So there's quite a big audience here and quite a varied audience here today as well. Where we'd like to spend the bulk of the second half of the presentation is actually the recommendations and what we think are the key themes that are coming out of those recommendations. We have held a roundtable with about 10 or so aged care providers recently, and I'll play back some of their thoughts and feedback to you as well, just so you can have a sense of what others in the industry are thinking, and we'll wrap up with next steps. It's also probably important for me to just clarify why we're involved today as well. As BDO, we'd really like to work with you, those of you who are in the sector, to serve Australia's elderly population. Our brand is about ideas, people, and trust. We've come up with those 3 words quite recently in our values campaign, and we really want to aspire to be people who help other people achieve their dreams. So the sector kind of fits with our values really, really well, and so we really hope that this is an opportunity to work with you going forward in responding to what is likely to be significant changes to the sector based on the Royal Commission. The final housekeeping thing that I'll note is I won't be able to hear you, but there is a question panel that you can click on and enter questions to, and you have the options to send them to me privately or send them to everyone and broadcast the question. I'll keep an eye on that and discuss them as we go along. So if there's anything you want to ask, you want to interrupt me, please feel free to do so. I'm very happy for this to be hopefully as interactive as we can. There's also a chat room as well, which I don't know if it's active, but if you can use the question panel, that'll be fine. We'll monitor both. I've got my colleague Katie online as well. She'll be monitoring for anyone having any issues from a technical perspective. So if you have any issues, please send the question through and Katie will jump on to help you out if you can't hear me or if you can't see anything. With that, we'll jump into the next bit. So our Royal Commission engagement and our engagement in the Royal Commission was essentially, we were an independent expert and we had to write a fairly large report on the profitability and the viability of the sector. So we got given, I think, 10 years worth of financial performance data for about 900 aged care providers. For those of you who are familiar with the data, this is the data I think you report to the Department of Health. This data probably hasn't been analysed before as well, so that's been pretty interesting. We put a fairly multidisciplinary team together for it as well. We had accountants, we had insolvency practitioners because there was a viability question as well, and we used data analytics to get through that many financial statements quickly. The brief was very broad. It was basically do what you think. So we just got given a data dump and we basically got given, we had to come up with the model, we had to come up with the assessment, we had to come up with everything. No direction was given to us. So it was completely independently analysed as far as the Royal Commission is concerned. And can I just note on behalf of the Royal Commission, they were really good at that. Like they weren't biased towards us in any way. We were literally left alone to write an independent report. On this slide, I'm just going to show you some of the steps. So we took about 9 steps to deliver the report. It started by understanding the operating model and the commercial model. We were instructed to make the report understandable for the layperson who's not in the sector. It's for public consumption. So in our report, I would recommend you to read it. In like section 3, we actually write out a 1-page description of the aged care model and the key factors and the key attributes that will be relevant from a Royal Commission perspective as well. We then had to define profitability and viability. We actually used Australian Taxation Office's definition of viability and profitability. We used multiple measures of profit as well, and I'll show you some of that very quickly. We talked about the limitations and assumptions of the data, and that was a key point as well. It was a key theme in our messaging to the Commission. And the point that we made countless times, even at the hearing itself, was that it's very important that an informed decision is made on the implications of that decision before a recommendation is made. And there are lots of limitations with the data that's available and the information that's available to make sure that people are considerate of that and be careful in making those recommendations when they do, and the implications of that. And so I think we were quite pleased to see a lot of the recommendations, the draft recommendations that are out there, do mention bodies of work to be undertaken before the final recommendation is implemented or the actual final detail of that recommendation is sorted out. So there'll be consultation and additional analysis. From a technical perspective, we did also have to work out the key segments to report. And we made it pretty simple. The core areas that we looked at was we separated approved providers from residential aged care and then the home care levels. So we reported at the approved provider level, RAC level, and the home care level. And then from a segmentation perspective, the core one that we looked at is for-profits, not-for-profits, and government. But we also looked at the performance by size, so top 10, the next 50, the next 500, and the bottom 500, I think was how it worked. So those segmentations were quite key to make sure that we could draw insights that are relevant. And then obviously we use data analytics so that we could test sensitivities and scenarios, and I'll show you some of that as well. From a technical perspective, I won't go through that into too much detail, but we had a fair bit of data to collect, develop a model, and create an environment that was secure and compliant. And the big one was we developed a series of dashboards and visualizations to convey our findings, which is the bit that I want to show you as well in terms of how that looks. So the first one's this one. It looks a bit busy, so just bear with me. I'll open this, I'll maximize this. For profitability, so in this example, I've got 787 entities. All these graphs are in the report, by the way. So if you download the report and read the report, you can see all the commentary on these graphs and what it means and how it came about. So on the left-hand side, you can see various measures of profit in accounting terms. The one we settled on as the main one, as the base case, was EBITDA as the earnings measure. These are FY 2018 numbers, so 30 June, year-end at 30 June 2018, which is a long time ago, especially given how long 2020 has been. And we've made the point that these numbers could be very different to how the world looks now at the moment. The reason we used 2018 was that was the last set of complete data that the Department of Health held. But from a functionality perspective, what this shows is that at the EBITDA level, 651 entities had positive EBITDA and 136 were not profitable. We set the threshold at 0, so $1 profit makes you a green entity here. We did build the capability to set a different number, so the flexibility here. So if I were to set an EBITDA margin of 15%, let's just say, so there's 651 that have positive EBITDA, but if I were to set it at 15%, this data set should update relatively quickly, and there's only 195 entities with positive EBITDA up to 15% or greater. So you can see the sensitivities and the opportunity to analyze sensitivities, and that's quite important because the variance across the sector was really, really high. The other thing we considered for profitability was cash position. So those of you who are accountants will note that sometimes accounting profit does not necessarily equate to cash. There's some accounting nuances that allow certain things to be recognized as revenue or expenses and etc. And you get a measure of profit that may be an accounting sense of profit, but not necessarily in a cash sense. So we analyzed that as well and looked at the net cash operating cash flow position as well. And we factored that into our profitability conversation and determination. So what we're saying in this graph, for example, is of the 651 entities that made a profit, 72 of them had negative cash flow. So we actually labeled 72 of them as maybe not profitable, whereas we only said 579 were profitable, and we said about 105 were not profitable. On a viability side, we had a slightly different approach in that the viability was a series of tests, and each test built onto each other. So for an organization to be viable, we first looked at whether it was profitable. Then we looked at their liquidity ratio, and I think we set the base case liquidity ratio at 1. So we found that of the 651 profitable entities, 234 of them had a low liquidity ratio of less than 1, and therefore at the liquidity test level, they would not be viable. But then we had a series of other tests, and we built a test for whether you can borrow money and pay the principal and interest as debt serviceability. We found that 188 of those 234 come back as they can manage their debt, essentially. We then went one step more lenient. Can you borrow money and just pay the interest only? There's another 31. And then we went one step further and said, can you sell off some of your non-current assets to get yourself into the viable territory? So after the series of those tests, we end up with an overall conclusion that 417 entities were viable, 222, and then the 85. So these ones were maybe not viable, and then 65 we were pretty confident to say that they're not viable based on our series of tests. Once again, we had the ability to set those liquidity ratios and test out different metrics. So if I were to set the liquidity ratio at 1.5, you'd see that number change relatively quickly. So only 311 now would pass the liquidity test. A liquidity test of 1 effectively means that an organization can pay off its debts that are due within 12 months, and they have enough assets to cover those within the next 12 months as well. That's what roughly liquidity ratio of 1 kind of indicates. One thing to note that was of significant interest to providers when we did this is how we handled refundable accommodation deposits for this calculation. The accounting standards basically say that refundable RADs are not current liabilities, which from a practical perspective is actually really, really tough. The reason they're seen as current liabilities is because obviously theoretically they're due at any point as soon as a care recipient exits. But in practice, though, not everyone exits. So we did some research over the last 3 years, and we found that the numbers around 40% is what you normally pay out. So what we did is we suggested that at least 20% should be current liabilities, because 40% means that you've got about 12 months to pay out 40% in 12 months. You do replace them with new residents and new care recipients. So we kind of picked the midpoint and said that you've got about 6 months to replace at least half of them. You'll be able to replace over the 12-month window. So that leaves about 80% that for our assessment, we actually classified 80% of RADs as non-current liabilities. And that was an important step to do, because otherwise every organization would be classified as not viable if you stuck to the strict letter of the law of the accounting standards. We did test different sensitivities of that as well, just to see what the difference is. So if, instead of 60%, if we were to only include like 80% as the number, instead of 80%, if we were to do 60%, we've got the ability to change the graph, and the calculations kind of auto-update as well. The idea was to show the Royal Commission that it's quite sensitive and there's no one-size-fits-all across 800 entities, and the ability to analyze that sensitivity is really, really important, and being aware of that sensitivity is really, really important as well. I think my computer's frozen itself doing that calculation, but hopefully it'll update itself in a few seconds. There we go, it has. So a significant number, so that number has now gone up from the non-viable ones have gone up from 65 to 87 in this scenario that I just ran. Where it got to a little bit more useful as well from a granular perspective is analysis of income and expenses across the industry and by entity. What we were asked to do is just analyze the drivers of expenses and costs as well. So what we did is we built this little tool to kind of do the analysis. And again, these graphs are in the report with a fair bit of commentary on each section. So I'm just going to open up the residential aged care one. Just clicked on the level of detail that we have. So on the right-hand side, you've got revenue, and on the left-hand side, you've got expense items. You can see the legend on the right to explain what the expenses are. So care expenses, for example, per patient across all 4 profits is 51,510. Revenue is 86,000. At the not-for-profit, the expenses aren't dissimilar at the care expense level, but there's different categories as well. We do have a different level of granularity as well, where we could go down even more granular. So we can analyze and compare organizations across sectors. The for-profit and not-for-profit was an interesting sector to compare, and so you can see just how much detail there is. Again, the report actually has a table in the appendix with all the numbers as well, so if you want to compare anything with your organization. I'm just going to go back to the moderate level of granularity and show you a couple of things. So the income bracket one was of significant interest, which is basically the ones sorted by size. So you can see differences in like the top 10 versus the bottom 500 on a per patient or per recipient basis. Just going to upload in a second, hopefully. And that granularity was again pretty useful from an insights perspective to try and understand what drives behaviors and profits and financial performance of aged care providers. So there you go, you can see the difference. So the top 10, for example, they earn $85,000 in care income at the residential level, but the bottom 500 only earn $79,000 per patient. So there is a material difference on a per patient level across performance as in terms of size. Where it was really useful for us, I'm just going to go back to the for-profit, not-for-profit split. The other bit of analysis that we were asked to do was to see this over time, and we analysed the graphs over 10 years, but the detailed graphs were only available for about 3 years because the data changed quite significantly over that period, and it's almost impossible to get a like-for-like comparison between 2018 and, let's say, 2011 or 12. What we did do, though, is we did a lot of work on the last 3 years of data that we had, which was 17, 18, 19, and we can very quickly compare across sectors the performance across those years on a per patient level. Hopefully this sort of information is useful to you to benchmark your own performance, but more importantly, going forward, it's really important to be able to categorize expenses so we can understand which recommendations are likely to impact which drivers of expenses and revenues, so we can plan better to deliver sustainable care and have sustainable organizations. And whether you're a not-for-profit organization or a for-profit organization, you still need to be sustainable. So it's not a while it's a not-for-profit, I think it's quite important that everyone acknowledges, and I think everyone does, that those organisations need to be financially sustainable and viable for a long time to care for Australia's elderly population. So that's probably all I'll say about from a data perspective. The other thing, I'll just go back to my slides. The other thing that we did do is we actually presented at the hearing as well. So we were at the Sydney hearing on the 14th of September and had to present our views on our findings, essentially, on the sector. And one of the key things we noted was the lack of transparency in the data. So when we're talking about limitations of data in step 3, and this is kind of how we highlighted it. So this slide was actually presented at the hearing. So in a standard aged care model, there's 3 players. There's the approved provider, there's the care recipient and the government, and each have their roles. There's a property play and an aged care service play as well from the approved provider side of things. And there's lots of movements of cash, capital, services to and from, and the government plays a guaranteeing role. I'm sure you are all familiar with that. What we did was then we simply drew another diagram to show, we added to the diagram to show all the related entities and other activities that are involved in the, which make the model quite complex from that very basic model that I started with. And the other thing we did, which you'll note, is there's a fair bit of color on here. We noted that the yellow parts, there's no data available to analyze. So we weren't actually able to analyze the return on the non-aged care activities or how the organizations were performing at the related entity level if funds were being transferred to those related entities. So our assessment was only this blue part here in the middle of the approved provider. And that's quite an important distinction because we did go on to say that it's quite important to have some level of transparency to be able to paint a complete picture of the profitability and the viability of the sector. The one thing we did do, and it's this note here, and I'll emphasize this again, there's absolutely nothing wrong with having structures like this. Organizations often do it for countless reasons. It's about risk management, it's about capital maximization, it's about there's a ton of reasons why you would want asset protection. There's a ton of reasons why you could do it, and they're all legitimate. What we're just saying is that the lack of governance and transparency within this group structure does increase risk for the government, at least, from guaranteeing the RADs and the refundable accommodation deposits, and also just assessing the viability. Is the sector viable, or is there some risk of the sector not doing well off the back of items being in the books of related entities, or the non-aged care activities creating risks as well? We did present a very high-level overview of the income and expenses and the liabilities of the sector and things like that. The only thing I'll note is just this bit here. You'll get a copy of these slides. You're more than welcome to read it, and obviously the report has all this information already. The one thing I'll note here is that non-aged care activities were 23% of revenues and 55% of profits. And then on the balance sheet side, the non-aged care related activities accounted for about 36% of assets. So there's a significant component of information that the data is not available on. Similarly, I just wanted to note from a profit margin perspective, while the median is 3% for profits, the range is very significant. So the bottom 25% are making a loss, the top 25% are making 9.4% profit margins. And the numbers aren't dissimilar in the not-for-profit as well. The top 25% are making 9%, the bottom 25% are making losses, and the median's a bit lower. So that sort of what you call spread makes it really hard to make policy that is a one-size-fits-all for everyone. So we just wanted to make sure that the Commission was aware of that, and we're fairly pleased that looking at the draft recommendations, that they seem to have taken heed of that advice, and they have considered in many instances. I haven't gone through it in complete detail, but I've seen evidence in many instances where that sort of lack of transparency was acknowledged and made aware of, and they knew that there was limited information to make some decisions on in some cases. So which basically means from a sector perspective, the aged care sector will have a fairly big opportunity to contribute towards how these recommendations are rolled out, and I'm sure there'll be tons of consultation as well, which is part of why we're putting groups like this together and doing webinars in here, because we'd like to facilitate and be part of those groups. That's something that we'd generally like to do, and we believe that we've got value to contribute to that discussion as well. So that's basically an open invite to all of you to continue being part of these discussions with us. We have agreed to have a quarterly event pretty much for the next 2 years. So that'll be 8 events over the next 2 years. And our next big one's going to be when the recommendations come out in February 2021. We're going to do a bit more of a deep dive into those recommendations. Just going to check in on the questions, if anyone's asked any questions. There is one, and I think I'm going to struggle to read it. No, it just says thank you, so it doesn't look like there's a question in there. But if there is, I'll check it in again. That's fine. So speaking of recommendations, I do want to spend pretty much the hour talking about that. I'm sure what we've done in the past, while interesting, is only useful for how you can use it going forward. Having said that, I would really recommend you to read the report that we've written, especially the sections that are relevant to you. It's a fairly easy read from the contents page. In section 3, we talk about the model and the potential impact of it, and I think section 8, we actually talk about implications and difficulties and challenges of making policy decisions in this sector. And so those arguments were quite well received, and I would really appreciate it if you could have a read of them as well, and hopefully they benefit you as well. So let's move on to the recommendations themselves then. There are 124 of them that are being proposed. It's actually quite an easy read. They've been categorized into 18 categories by the Commission. It's an 85-page document you can download off the Royal Commission's website at the moment to have a read through. It's an easy read because the way they've structured the document. So you can essentially read just the first 2 lines of the recommendation and decide whether it's relevant to you, and you can decide to read the rest of the box, or you can just move on to the next recommendation pretty quickly. I would really recommend you to read those and start marking out the ones that are relevant to you. As I said, there's 18 categories that they've called out. For the February presentation, we're probably going to start doing a bit more of a deep dive into those. For today, though, we've started coming up with some themes, and we wanted to talk to you about those themes, which is our spin of this. And the other thing that we've done is, as I mentioned, we've had a roundtable already, a physical one for those of you who are from outside of Queensland. So we all got in a room and had a conversation about it. And in that roundtable, we actually posed the question to the participants who are from the sector of what's relevant to them and what's keeping them awake at night, essentially, from the Commission's recommendations. We'll ask you the exact same question in the poll at the end of this. If you could please participate in that poll and just answer, just give us a bit of a nudge into what's important to you. That'll help us make sure that these sessions are more valuable for everyone going forward. The other thing we did with the group as well is we looked at lenses from which one should view the recommendations. So one example is there's a whole bunch of timelines in the recommendations, so that the recommendations are very specific, saying like by January 2022, this must be in place. By 2023, this other thing must be in place. So we thought it'd be really good to just summarize and call out those dates and have a document that people can just read just those perspectives. There's about 7 or 8 perspectives that we think are relevant. I'd like to take you through them today as well and see your views on that. And again, if you could provide some feedback, if you want anything else to be considered, that would be really, really useful as well. So let's go to the themes of where we think what we've done at the high level initially from an analysis perspective. So these were the poll questions that are going to pop up at the end of it. So your top 3 issues, how you're responding to the recommendations so far. We're really interested to see how this is impacting the sector. So if you've got a budget set aside to respond, would be interested to know anonymously, obviously. We do understand that this is commercial in confidence. We'd just like to understand what the sector is doing from an investment perspective. Is this how much of an obligation or how much of a change has this caused for you, both from a financial perspective and also from a resource perspective? So how many FTEs have you allocated to responding to the Royal Commissions, and how many do you expect to going forward as well? Again, that sort of information will help us better inform how we can provide information publicly, freely to everyone through these webinars and forums that might add additional value to you. So what we found that from the sector participants of what matters to them, there were quite a few. They talked about workforce, was a big one. This is in no particular order. The participants also noted that, as I said, it's quite a diverse group of providers, and having a bit of alignment on the vision of what we're trying to achieve and getting more industry cohesion is really, really important. I understand that there's 7 peak bodies, and they have, from what I understand, started to work together. So if you are part of those peak bodies, would really be interested in a conversation just to see how we can better assist. Transparency is going to be a key one. The funding model is going to be important, as I'm sure everyone, that's an obvious one, of course. Everyone's looking at it very closely. The funding model is interesting in the sense that if you look at the recommendations, there's actually both sides of the equation are covered. So there are some recommendations that talk about pricing. It's implicit that pricing will go up because of that. So the funding will go up because of what that recommendation discusses, and it discusses additional regulatory burden, additional obligations on providers, and the recommendation actually talks about having a pricing authority that sets that, takes all that into consideration and talks about setting that up. I will note that the commissioners actually publicly sort of disagreed on that pricing authority one. You can read up on it in the news. It made a couple of headlines on the day those draft recommendations were released. So it'll be quite an interesting to see what the final recommendations are when they come out. The operational impact is going to be a key one. The regulation, obviously, from a RAD's perspective, there are it's quite a significant change, and this is one set of recommendations that we were shown before they went publicly, but we weren't asked for an opinion on it. We just was shown them as a courtesy, I think. And the requirement that stood out for us, which is going to be significant on the RAD's basis or the financial basis, is the liquidity and the capital adequacy requirements. I think that'll be a big shift from what the current approach is. So that'll be interesting to see how that plays out. Those of you who are in the banking sector will know all about capital adequacy. The only difference is in this instance, we're not lending it out to anyone, so as aged care providers. So it'll be interesting to see how that kind of works. The change impact for for-profit operators was high on the agenda for many of the for-profit providers that were in the room. What does that mean? The narrative around for-profits in the media, at least in the aged care sector, with the Royal Commission narrative and the news media as well. It seems like there's a lot of focus on that nature of the for-profit business and the not-for-profit business. So it'll be interesting. That is of concern to many providers, so that made the list as well. The last two were quite interesting for me. This was quite philosophical. One being the move towards a more hospital model, and the other one was the broader cultural issue of where does aged care fit in the average Australian psyche? What does that look like? And how do we talk about aged care, and how do we view aged care in Australia as a whole? And I think the point that this particular CEO was trying to make was that we probably aren't addressing that in this Royal Commission, so we're kind of confined to the boundaries of the same thinking or the same constraints that we currently have. So that was quite interesting. It was quite philosophical as well. It made for a pretty decent conversation for us as well. We personally at BDO, we've kind of taken it one step slightly higher and come up with a few themes. But sorry, I didn't realize this slide is in here first. I'll just quickly go through this slide. So as I said earlier, you'll be asked the question of how are you responding and what sort of investment level and resources are you putting into it? So 5 participants answered that question for us, and you can see that some people are budgeting over $1 million to respond to the commissions for them. They've all dedicated, or majority of them have already dedicated FTEs to this, and they're expecting to dedicate far more FTEs going forward. They also have a number of projects in play as well. So we've got, it looks like everyone's already set up at least one project to look at the Royal Commission. So that's quite handy to know what the industry is doing, and hopefully from today we'll get a bit more data to build up the sample set to understand that a bit more. That'll hopefully get me to the themes that I was trying to get to for the last 5 minutes. So the first one is the financial reporting. I think it's very, very clear if you read the themes, if you listen, if you read some of the transcripts of the hearings. The hearings are actually, the videos of the hearings are publicly available as well, but the Commission's website has crashed on the video front at the moment, so I think they're going to fix it. You can listen to the video as well. We're more than happy to send our clip of our presentation at the Commission hearing as well. That might be helpful to you. But what is very, very clear is that transparency from the sector of what is happening to the dollar that is funded, every taxpayer funded dollar, especially if there's a related party and group structure being used, that traceability of that funding is going to be quite important at a reporting level, and it's quite obvious that is likely to feed through in the recommendations. The second one is that we think is really, really important. This is probably the most important one for those in the sector. Understanding your revenue and cost drivers is going to be really important, because there's going to be a lot of change, and being able to analyze that change quickly, understanding how that change impacts which cost drivers for you or which revenue drivers for you, and then how to optimize that. It might even mean you have to do things very differently under the new model yourself. Not because that you've been instructed to do it differently, but simply because of the way the funding is structured, or the way it will work, the way the change works through. You might have to reinvent the way certain things are done within your organizations. Which is the reason why we use data analytics to drive our report and work through, essentially get to that granular level, but then be able to build it up very quickly as well, so that we can analyze implications and test scenarios very quickly as well. The next one is the duty of care and the quality of care. You've all seen this already, staffing ratios being suggested. There's going to be additional compliance burdens on that front. So the operational, the commercial, the governance of all of that quality of care, it's going to be a package thing. It's going to be it might even be a culture thing as well within your organization, in how to drive quality and how to position yourself on quality. I will note that the Commission did ask us to see if those correlations between profits and quality. So the hypothesis, I guess, would be that high profits means it's coming at the expense of quality. And unfortunately, because of the spread, there wasn't much evidence to clearly suggest that. But again, that's in the report. You can have a read through what the findings were. What will probably change is the focus on those quality metrics. So there's probably likely to be more scrutiny on how those metrics are either updated or applied in their current form. The fourth category is the broader one. This is a macro one, and we kind of suggested, we made this point multiple times to the Commission. We said that please be aware that there's an overarching commercial model here, and the investment decisions that people have made. It's a very capital intensive industry. There's millions of dollars or billions of dollars floating about, and lots of decisions have been made based on the way the current model works. So any changes to that current model may impact both the existing investments, that people may revisit and review their investments, or it may impact future investments in the sector. And that's quite important to note. The final one is on communication. So reputation, so both internal and external, managing your reputation and boosting your trust. It's remiss of me not to mention on the title, you may have noticed that we've partnered with Roland Group, which is a communications organization, long-term partners of ours at BDO. We've partnered with them on this front because they're the experts in this communication front, not really our area. But what's really important is a clear communications plan and strategy, focusing on your reputation, your culture, your quality, and your sustainability is very, very important right now, given the sentiment around aged care, or given the sentiment around anything that has a Royal Commissioner on it. So getting that right and planning ahead on that is going to be quite important, we feel. And on that note, Janet Howen from Roland has actually created a small video for us. I'll just play it. It's 2 minutes and 30 seconds. And Janet kind of goes into a bit more detail on what you can do as an aged care provider on the communications front. Just take 2 seconds to load.
Hi everyone, my name is Janet Howen. I'm the Group Manager of Organisational and Change Communication at Roland. We've got many years of experience in both aged care and community care for private and not-for-profit providers, helping out with strategic communication planning and projects. We know that the aged care sector is absolutely no stranger to having to successfully manage change and adapt. after many waves of reform over many years. However, we think that the changes that are coming as a result of the Commission's report and recommendations, financial, operational, workforce and cultural, will absolutely demand and deserve an integrated, significant strategic communication planning response to really build a platform for successful delivery of change across both internal and external stakeholders. We think the time is now to be doing that work. We think you need to be looking at brand positioning and marketing, which is not just about websites and advertising, it's about pulling the threads together to be able to position your organisation for the future. Secondly, your employees, of course, are your brand ambassadors and will be the ones who are delivering at the front line this change agenda successfully. So how do you get the right messages to them at the right time in the right way when they are very busy and operational and very focused on care delivery? So we see looking at your internal comms frameworks and the challenges and gaps that you might have there now to set yourselves up for success from the change communication point of view next year as really critical. Thirdly, lots of lessons learned from COVID, issues and crisis management planning, business continuity, embedding those learnings into your protocols and processes, roles and responsibilities, making sure that that plan can be picked up and run with at any time. We think that the time is now to be fixing that up as well and making sure that it's ready to roll as and when needed. So really hand in hand with all the other work that's going on to prepare for the Commission's report and findings, we see strategic communication planning that pulls the threads together, gives you a great platform for successful change across both internal and external stakeholders as a critical success factor and something that you should really be looking at now to be getting ready for next year. Thanks and good luck.
Okay, and we're back. Hopefully you can see and hear me and see my screen. Thank you very much, Janet, for that video as well. It's always difficult to record those videos out of context, so thank you for that. Okay, back to where we were. So essentially, there were 5 themes that we thought that are relevant to consider at this stage. I'm just going to undock this. If you just bear with me, the video has actually thrown my screen off a little bit. If I can, that's not going to go away. Okay, it's fine. Hopefully, it's not blocking your screen, and you've got a view of the full screen at the moment. Okay, the next slide was going to be the video again, just in case it doesn't work. This is probably where we've spent a little bit of time again with that group at the roundtable, where we started thinking about what perspectives we should view the recommendations from, and whether you attend our next webinar or not, hopefully this adds value to you. And please, in the comment section or the question section, add on any others that you think may be relevant, and please feel free to email me as well afterwards. So the first one is the new entities being set up. There are, I think, 3 or 4 new entities being proposed in the draft recommendation. So being able to summarize those and what they are and what their purpose will be good to call out. The timelines, that's the example that I gave earlier, and just whatever can be timelined, it would be good to timeline that, and just so we can prepare better from a strategic perspective. I do note that there are many board members on the call here today, and I think this is quite relevant for boards as well as executives. Just understanding the risks associated with the sector and the timelines will help, and you can then overlay that with activities in your organization about those, what you're doing along those timelines yourself. The funding side is going to be very important, obviously. There's probably 3 perspectives within the funding, like sub perspectives. Understanding the revenue side and being able to maximize those would be really important. The expense side as well. And as I mentioned earlier, it might mean that you actually have to do things differently. You might have to find new ways of working out those expenses so that those expenses can be managed even more so. And I do note that the industry does run on very tight margins anyway, but I think it's just going to force further innovation in the sector. And there's opportunities. I think this is an opportunity to rethink and reimagine how it can be done. And then obviously looking at it from a capital perspective versus an operations perspective as well, because there's the property play as well as the service play, as I mentioned earlier. The fourth perspective is the operational impact. So how does it actually work on a day-to-day, particularly from a workforce perspective? That's going to be very important. I think we may talk about communications a bit later, but I think communications probably goes through all of it, particularly this one. You heard Janet earlier on the video talk about how important your employees are as ambassadors of your organization, and that training and the workforce planning that goes with that and workforce development that goes with that is going to be quite important as well. And again, looking through the recommendations, being able to put this lens on and evaluate the recommendations to, oh, yep, that has an implication for me, is probably something that we would really recommend that you consider. Structural impact, this is talking about corporate structure. There's likely to be fairly significant impact if there are additional transparency obligations. It may also mean that the not-for-profits may start using group structures a bit more. The evidence from the data is very clear that the for-profit sector uses group structures and related entities far more than not-for-profits. And it may mean that the new recommendations and then might pave the pathway for not-for-profits to do the same for different reasons, obviously. Then the quality and safety, those words are in the name of the Royal Commission. So yes, that's going to be a big focus and working through that. Someone did note that loneliness is quite an intangible factor that might get overlooked, as having that lens on it might be very useful from a quality and safety perspective as well. Governance and risk. This one's for all the board members on here and executives. So everything from liability insurance to your regulatory obligations, even your perception of you as an organization, the public perception, everything, Google reviews of your organization, social media talking about you, this public sentiment, the digital sentiment of yourself, of your organization. All of that will obviously need a closer eye and closer response from organizations. And then adding to that the communication side of it, how you're going to then communicate that throughout your organization so that it's everybody's responsibility and everybody's on board with it, and your reputation, and you build trust in the market. We think there'll be, like with any major disruptions to any market, this is probably the largest disruption to the industry in a long while. And that'll probably create a lot of opportunities for the astute provider. There'll be opportunities to either gain market share or improve the way we do things and serve the industry better. And there'll be opportunities, I think, granted, assuming that the sector can come together well, I think there'll be opportunities to also consult and provide feedback and advocate for the sector and influence more so as well, because it's on everyone's agenda at the moment. The way I talk about the sector to my team here at work in BDO is I remind everyone that one day we are going to be customers, and it's in all our interests that the aged care sector is a viable, thriving sector in Australia. So that's going to be an important one. The communication is, I think, what I've wrapped up on, and I think communication will go through all of those 7 above it. I just used plain language and probably should have used the word difficult, but there will be difficult things to communicate and there'll be easy things to communicate, and being able to categorize those and having a bit of a plan is going to be really, really important in our view. That does sort of bring us to the end. I think I'm going to be able to give you some time back in your day, hopefully. I know I'm hang on, 5 minutes, okay. So going to the next steps, you will get an email from us, from BDO, with some links to the slide deck that you've just seen. You'll get a copy of the recording of this webinar. Would really love some one-on-one conversations that are more detailed with you. If you're interested in that, very happy to please reach out to me. Please send me an email. There will be a feedback survey going on as well. For today, there'll be a really important, the most important thing, and I'll wrap up early so you can please spend those 3 minutes doing that. The poll that'll pop up on your screen straight after this webinar. If I could please request you answer those questions, that'll help us as well. We'll host the second roundtable discussion in the week of the final recommendations. I think it's in the 21st of February from memory, or that third week. So we'll probably host it either side of it, or probably the week after is more likely. And hopefully that's useful. And then the final one is, if you are interested in joining our quarterly discussion group over the next 2 years, please feel free to register and sign up for that. So with that, I'll wrap up. There were a couple of questions and comments that came through. I wasn't able to read them on my screen for some reason, but I will get a copy of them at the end of this webinar. So once I get them, I'll email them back and respond to that as well. So thank you, everybody. I'll finish this 4 minutes early, so give you some time to answer those questions that pop up. Thank you very much for your participation. It's a real pity that this one's not as interactive. These webinar formats aren't as interactive. I'd love to hear from you. So hopefully we'll do something maybe slightly differently next time and see how we can make it more interactive. So with that, thank you. Have a good day, and Happy New Year if I don't hear from you before the new year. Thank you. Take care.